There are realtors right now sending out market reports predicting a 5 to 10% price growth in Vancouver in 2026. And in January of 2026, well, the MLS Home Price Index posted its largest single month decline since 2009. Those two things cannot both be true, and I think you deserve to know which one the data actually supports. I'm Rouzy with the TK Group. I've been working in Vancouver real estate for years, and what I try to do on this channel is say the things the industry doesn't particularly want said. Because the biggest financial decision of your life deserves honesty, not spin. Today, I'm going to walk you through exactly what I'm seeing on the ground right now, what the numbers are actually telling us, and where the real opportunities and traps are in this market. And if at any point you want to sit down and talk through your specific situation, there's a link in the description to book a call with me directly. No charge. Let's get into it. So let's start with the headline numbers that almost nobody's talking about. The sales to active listing ratio in Metro Vancouver recently came in at 9%. Guys, 9%. That means of every listing sitting on the market right now, only 1 in 11 is actually selling in a given month. To give you context, that's the lowest reading since September of 2012. And what that number tells you, not as an opinion, but as a statistical fact, is that these are the best buying conditions the city has seen in over a decade. You have more leverage, more negotiations today than you've had in the past decade or more, even before Instagram existed. Now, I know what you're thinking. If conditions are this good for buyers, why isn't everyone buying? The reality is most people are waiting to time the bottom. They want to see the home price index tick to its absolute lowest point before jumping in and riding it back up. But the truth is, 98% of buyers will never actually time that accordingly. What they end up doing is waiting through the best window and buying on the way back up when everyone else is already confident again, which is exactly when your leverage disappears. We ended 2025 with the lowest annual sales in 25 years in Metro Vancouver. Prices in many segments are down 10 to 25% from the peak. In some product types and outer markets, it's even 30% or more. You can negotiate, you have time, you have options, and that combination certainly does not last forever. But here's where I want to be direct with you, because I think there's a dangerous misconception spreading right now, and it's going to cost a lot of people lots of money. A lot of buyers are coming to me saying, hey Rouzy, I want to buy a distressed pre-sale. The pitch sounds logical. Someone bought a pre-sale condo at the peak, the evaluation is absolutely underwater, and they can't close. They're going to walk away from their 10, 15, or even 20% deposit. You can come in, assume the contract at a discounted price. I get it. It sounds like a deal. But here's the problem. In a lot of those situations, the pre-sales were originally sold 20, 30% above the actual market valuation at the time they were sold, and the market has continued to decline since. So even in a scenario where the original buyer hands you their deposit and says, keep it, the unit you're closing on it is still worth less than what you're paying. You've now inherited someone else's bad trade and dressed it up as an actual opportunity. And here's the data point that confirms exactly what I'm describing. Active pre-sale assignments in Metro Vancouver have crashed from nearly 500 down to 100 or less now. You would think with all the distress, assignments would be everywhere. Well, they're not. And the reason isn't because the distress went away. The reason is that the top pre-sale brokers in the city, the ones who actually specialize in this exact product, are telling all their clients, don't even bother listing. There's no liquidity. There's no market for these assignments. You're better off either closing and selling as a completed unit and taking the loss, or walk away entirely and deal with the legal fallouts from the developer. Let me give you a concrete example of what the loss actually looks like. There's a project in downtown Vancouver, one of the most high-profile buildings in the city, priced at what was the highest blended rate ever seen downtown, around $2,800 a square foot. That building started closing in 2024 December. Now we are well over a year into closing, and in that entire time, there has not been a single resale recorded on the MLS. Not even one, guys. The unit's currently asking for 1.6 million on the open market. Well, they closed as a pre-sale for 2.5, and the ones asking for 1.7 on the open market right now were closed at 2.6. Now that's before you factor in any closing costs, the 5% GST, 2 or 3% property transfer tax depending on your purchase price, any realtor fees associated to selling your home, and we're talking about 7-figure loss for individual units. And the silence on the MLS tells you everything. These owners can't sell at a number that makes sense, so they're holding and absolutely hoping for the best. Now, I want to be balanced here because there are genuine opportunities in this market if you know where to look. Court order sales and foreclosures are rising back towards levels last seen in 2008 and 2009. Motivated seller in those situations fluctuations, state sales are another great area. Inherited properties where the beneficiaries want to simply move on and are typically less anchored to a price. And on the product side, well, the detached segment is showing more resilience than condos right now. The data is starting to diverge between the two markets in a way that matters if you're deciding what to buy. Here's what I want you to take away from this. The noise right now is loud. You've got industry forecasts calling for double-digit price growth, sitting right next to data showing the largest monthly price decline in 15 years. The people predicting a 2026 boom are not necessarily lying. They may genuinely believe it, but they're definitely not running the numbers. The numbers right now say buyer's market. Simple. A buyer's market. Best conditions since 2012 and a pre-sale segment with landmines that requires real due diligence before stepping anywhere near it. The best move in a market like this isn't to wait for certainty. It's to get clear on your situation so you can move decisively when the right opportunity shows up for you. If you want to do this with someone who actually is in the market every day, book a time with me. The link is in the description below. I'll talk to you soon and see you guys in the next video.